what is the market going to do today, June 26, 2025? I'm going to tell you right now. Let's start. Okay, first of all, the spiders, okay, are ready to break out and join the Qs, okay, or I use XLK. They've already broken out. And what's been leading the market has been our bank stocks. Example, we're in JP Morgan, Citi, Goldman Sachs. These are the ones been driving the market. And those stocks were up an average of, we have about 16% gains in those stocks, the bank stocks. Now, the Magnificent Seven stocks, they haven't done well last quarter, not really doing well this quarter, but a few are. Our NVIDIA is doing well, that's driving the market up, and also our microchips, that's driving the market up, semiconductors, MU. But going back to the Magnificent Seven, you got to be a little careful of Magnificent Seven. It appears that, again, they're not doing well. Now, even though Microsoft looks like it's having a good time and it's breaking out, the only thing that worries me about that is I don't like buying stocks that have big gaps because they always tend to come back and fill and surprise you. So that's why I'm staying my NVIDIA, because why should I take the risk on Microsoft? And that's why I'm staying with my MCHP and my MU, Micron. Why do I don't need that kind of a risk, okay? And we're up right now with our, as I said, our bank stocks, we're up on average 16%, and our tech stocks, NVIDIA, microchip, those are up between 30 and 40%. So we've been doing well with those. Now, for the market to continue to rally, we need some help from IWM. Now, it doesn't mean we can't rally without IWM, but you can see how IWM is lagging big time as the spiders are breaking out, okay, and the tech stocks are breaking out, but IWM is not breaking out. And you need IWM to sustain the rally once we break out, okay, because, again, it's the heart and soul of the economy and the market. But everybody's, again, is avoiding the economy. Nobody seems to care what the economy is doing. And why is that? Let me give you some stats. Because since 2008, remember, to 2025, right after that crash, they did something incredible. They said, forget earnings. All we have to do is do stock buybacks. And they printed enough money to give to the companies to buy $5.5 trillion, gave the companies to do stock buybacks instead of using that money for, business investments. And then another thing they did is they replaced earnings and growth when they took our money supply and increased it from 2008 to 2025, 173%. Went from 8 trillion to 21 trillion. So 8 trillion to 21 trillion, 5.5 trillion they gave them to buy their own stocks back. So you can see where a lot of this activity came, and that's why everyone was depending on the Magnificent Seven, because that pretty much masked what was going on underneath. So the only thing we have to be careful about now, if we break out, and if we do break out, we're going to get a big breakout because there's going to be a lot of short covering. That means all these people believe the market's going to they've been short, especially big institutions. They're going to have to turn around quickly and buy their own stock back. So we could get a big breakout. And we're going into earnings season. FedEx reported, as I said, the first one last night. And earnings season normally pushes the market up because the bank stocks start out pushing, the earnings season. They always have good numbers, and that always seems to help. So regardless of what the economy is doing, you can see how we got here, how the NASDAQ went up 2,000% and the S&P over 700%. But can they do that going forward and keep pushing the market up with a bad economy? And the answer is no, they can't. Those days are over, and that's what's worrying, again, the president and Wall Street, because they can't go back to zero rates because all this cutting of rates to push this market up since 2008, 2009 has drove the deficit up. That's the problem. So, but it doesn't matter. For now, let's just focus on the breakout. Let's see if the short's covered. Give us a big move to the upside. Stay with your strong stocks like I just gave you, your sectors, which are, your bank stocks, okay, a few of your tech stocks, and you'll be just fine. Gold stocks and gold mining stocks, get ready to short them.
5 minutes.
Those could start coming down. Keep an eye on those because those could start pulling back. And same thing, stay away from your oil stocks. Those are too volatile. So that's it for today. What is the market going to do? Well, I hope this helped you. And I'll see you on the charts. Now, for information, more information on Phil's Gang, just go to philsgang.com. It will help you. See you on the charts.